Hello there. This week, I want to talk about the current economic situation and how we need to position ourselves into the next year. In retrospective, this year was a challenging year for all of us. Yet, markets were rallying up to all-time highs, and most of other alternative asset classes followed the same pattern. This holiday comes with a great amount of free time to rethink your approach for the next year. So, I plan to share my thoughts on the markets in this episode.
Welcome to Cashflow Formula, insights into the world of investing, and learn how to build wealth through cashflow, simplifying the complicated world of alternative investments for you. If you like what you are hearing and want to learn more, consider subscribing to the show wherever you listen to it. Here's your host, Shanil Weerasinghe, founder of SNW Investments.
As the Australian real estate market experiences its biggest boom in over 30 years, the Reserve Bank and regulators since that announcement in early October have made noises about the potential for further lending curbs, particularly if credit growth continues at multiples of income growth for an extended period. To give you an idea about the real estate market boom, here are the numbers. The value of the Australia's property pool has blown out from 7.2 trillion to 9.4 trillion just in 12 months. So I'd be really careful in this market as the possibilities for an interest rate hike from RBA is very much on the table. This will eventually ease the heat on real estate market. US stocks ended last week on a downbeat, indicating that the investors are worrying about the rising interest rates and the new COVID variant. The Bank of England on Thursday became the first major central banks to raise the interest rates since the pandemic started. Russia's central bank increased its rates on Friday, and several others have raised rates or are poised to. This interest rate hike was a surprise for many analysts. But would this provoke other banks across the world to follow their lead? Last week, RBA governors said that they are still not at the point where they can confidently comment about the inflation. This is due to rising economic outlook with a lower unemployment rate of 4.6% in November and with 1 million new jobs over the next 4 years. With that being said, still the majority of businesses are experiencing skill shortages, mainly due to border closure. Going back to the main topic of interest rates, however, RBA governor clearly indicated that they are not looking to hike the interest rates till late next year. China and Australia had a long-lasting relationship that has been put to test now. Major Chinese real estate developers found themselves unable to meet their bond obligations and with no government help. Chinese developers are in some serious trouble now. Chinese property companies are a major part of the region's high-yield market, and China overall accounts for over half of Asia's $210 billion denominated junk bond market. There will be less impact as opposed to what we saw in 2008, as Chinese real estate-backed securities are less exposed to Western world unlike US-backed securities. To wrap this up, I won't see much impact from Chinese real estate developers directly to Western countries. However, we might see a slight decrease in demand for major commodities such as iron ore from China. Well, all in all, this year has been a roller coaster of ups and downs. The only way to survive in these uncertain times is to educate yourself. Hope you have a Merry Christmas. Wish you all the best for the new year.
Thanks for listening to the show. Remember to join us again next week for another episode. Learn more about what we discussed here by visiting our website cashflowformula.com.au. Until next time.